Imagine being the person who has to walk into the Oval Office and tell the president that while he's, aggressively pushing forward the construction of this new White House ballroom.
Wrong way.
Right. While that's happening, the global price of oil just spiked to incredibly dangerous levels, and all because of a single sentence he uttered about a tiny island in the Middle East.
Yeah, it's really the ultimate study in split-screen governing.
Exactly. You have a purely domestic, highly localized construction project happening on the exact same day in the exact same room as this massive global geopolitical shockwave.
You're watching this micro-level domestic focus just completely collide with macro-level global volatility. I mean, right in real time.
It's wild. It kind of makes me think of a massive suspension bridge, like the kind that spans miles of open water.
Oh, I like that analogy.
Yeah, because you generally expect a bridge to be this, rigid, immovable object. You think of solid steel and unyielding cables.
Right, but engineers will tell you that if a bridge doesn't flex, if it doesn't actually sway and bend when the wind hits it, it's actually in extreme danger of collapsing.
Exactly. It has to absorb the ambient pressure. The flexibility is literally its survival mechanism.
Yeah, the stress can't just concentrate in one place.
Yeah.
Because if the load distribution fails, the entire structure fundamentally compromises itself.
But, okay, what happens when the wind is hitting that bridge from the north and, say, a minor earthquake is shaking the bedrock beneath the foundation?
That's a bad day for the bridge.
Right. And then a line of heavy freight trains is crossing the deck, and, a cargo ship just bumped one of the main support pillars, all at the exact same time.
Well, that's when you find out what the bridge is really made of. That's, maximum structural stress.
Maximum structural stress. And that image, that sets the stage perfectly for what we are doing here today. So, welcome to the deep dive. We have curated this session specifically for you, the listener, to help you navigate what is just a truly unprecedented moment.
It really is.
And just to ground us, today is Monday, March 30th, 2026. The news cycle right now is moving at a blistering pace, and we're looking at a landscape where the structural stress on America is, it's coming from every conceivable direction.
Yeah, and we have a very densely packed source text to guide us through all this today. We're looking at an excerpt from a text titled The Trump Doctrine, Geopolitics and the Global Market Economy.
And our mission for you today is to take a series of, seemingly disconnected breaking news items, everything from naval choke points in the Middle East all the way down to that ballroom inside the White House, and reveal the overarching web of pressures America is facing simultaneously across security, the economy, and foreign policy. Okay, let's unpack this.
Well, real quick, before we jump into the deep end, I do want to place a quick framework around how we're going to handle this material.
Oh, sure. Good idea.
Because, this excerpt touches on some highly charged, intensely debated political policies. We're talking about global tariffs, delicate foreign relations, and controversial domestic executive actions.
Heavy stuff.
Exactly. So I want to explicitly remind you, the listener, that our role here is not to take a side. We are not here to endorse these policies, nor are we here to condemn them.
Right, we're just looking at the mechanics.
Purely dissecting the facts, the market reactions, and the studies presented in the source material. We want you to understand the underlying mechanics of what is happening, completely free from the political noise.
Love that. We are just looking at the gears of the machine to see how they turn. So let's look at the first massive gear turning in the source material, taking us straight to the Middle East.
Do it.
The text notes that tensions are rising incredibly fast. Specifically, President Trump is signaling possible action involving Iran's Karg Island, which puts Iran's primary crude export valve directly in the crosshairs.
Which is a massive deal for global energy markets.
Right. But then the text throws a curveball. It states that diplomatic talks might actually be coming. So I look at the global market like a highly sensitive seismograph that picks up, the faintest tremors anywhere on Earth.
Oh, definitely.
But wait, if the text mentions diplomatic talks are on the table, shouldn't that calm things down? In a normal market, the prospect of peace talks drops oil prices immediately.
You would think so, yeah.
So why is traders' panic overriding the diplomatic signal here? Why are oil and metal prices already surging?
Well, what's fascinating here is the severe disconnect between physical supply chains and psychological pricing in global commodities.
Okay, break that down for me.
The market does not wait for a missile to strike or a treaty to be signed. It trades entirely on the signal. And, Kharg Island handles the vast majority of Iranian crude exports. It's this massive, highly concentrated choke point in the Persian Gulf.
So it's a huge vulnerability.
Exactly. So when the president signals possible action against a valve, that critical algorithmic trading and human speculators immediately price in a risk premium.
So they are essentially buying insurance on the worst-case scenario.
That's a great way to put it.
Buyers are willing to pay a massive markup right now just to guarantee they secure the physical oil before a potential disruption cuts them off entirely.
Yeah, because diplomacy takes time. It involves summits, drafts, slow negotiations, military action, or severe sanctions.
Yeah.
Those happen in minutes.
Right. It's instant.
So the market structure inherently heavily weights the fastest possible outcome. Traders panic buy oil and industrial metals to secure their supply lines. They lock in futures contracts 6 months out at elevated prices.
Wow. Which creates extreme volatility.
Exactly. The dual reality of slow-moving diplomacy combined with the rapid-fire threat of physical action, it acts as an immediate heavy pressure point on global foreign policy. Before anyone has even fired a shot or signed a paper, the global baseline cost of energy just skyrockets.
And the inflationary pressure from that Kharg Island risk premium, it doesn't just stay in the Persian Gulf.
No, not at all.
It immediately bleeds into global shipping lanes and manufacturing sectors.
Right.
The cost to fuel a cargo ship goes up, the cost to run a factory goes up.
Everything gets more expensive.
Which actually makes the political calculus of enacting domestic economic policy incredibly dangerous right now. We are looking at an American consumer base already dealing with those surging energy costs.
And that underlying global inflation is the critical context for the domestic economic policy laid out in the source. We're really setting the stage here for a massive consumer squeeze.
Yeah, let's shift to that. The source introduces a new study regarding tariffs, concluding that U.S. consumers are actually paying the biggest price for these policies.
Yeah, that study is incredibly revealing.
Here's where it gets really interesting. Normally, tariffs are framed in the political theater as a geopolitical weapon, right? Like to penalize foreign competitors or balance trade deficits.
Right. They're presented as this state versus state mechanism.
Exactly. So how does the study draw the direct mechanical line from a border policy straight to the U.S. consumer bearing the brunt of the cost?
Well, if we connect this to the bigger picture, it requires looking at the mechanical reality of how a supply chain actually absorbs a tariff. A tariff is a tax collected at the U.S. border, right? And it's paid by the American importer bringing that good into the country.
Oh, wait. So the foreign government does not write a check to the U.S. Treasury?
No, not at all. The American business does.
So the importer writes the check to U.S. Customs. Their cost of doing business spikes overnight. I assume they just pass that margin squeeze down the line.
They do.
But doesn't that assume domestic manufacturers can't ramp up production fast enough to undercut the imported tariff-heavy goods? Like, why doesn't the market just pivot to buying American-made steel or components to avoid the tax entirely?
Because domestic supply chains simply do not have that kind of elasticity. You can't just build a new semiconductor fab or a specialized steel mill overnight.
Right, that takes years.
Years of capital investment, permitting, labor training. So in the short to medium term, American businesses are locked into their existing global suppliers. So they pay the tariff. But they don't just pass the exact cost along. We see something called the bullwhip effect.
Oh, the bullwhip effect. Break that down in this context because that sounds really important.
Let's say a tier 2 manufacturer imports a component and pays a 10% tariff at the border. They don't just raise their wholesale price by 10%, they raise it by, say, 15% to hedge against future volatility.
Because they're fearing the tariff might go to 20% next month?
Exactly. Then the Tier 1 assembler buys that component at the 15% markup. They add their own buffer for uncertainty, marking the final product up even further.
Oh, wow. It compounds.
Yes. By the time the distributor gets it to the retail shelf, that initial 10% border tax has amplified into a 25 or 30% price hike.
That's wild. So the consumer ends up paying this phantom tax created entirely by supply chain anxiety.
Exactly. The anxiety itself is acting as an inflationary multiplier.
And this is where the simultaneous pressure becomes a perfect storm. We just established that the baseline cost of global manufacturing and shipping is already surging because of the Kharg Island signals, right? The raw materials and the fuel cost more.
Yep. So you take that surging baseline global cost, and then you slam a compounding tariff on top of it when the finished good reaches the American border.
That is brutal.
It is. The study highlighted in the text shows the consumer basically catching the brunt of both of these macroeconomic forces simultaneously. It's an interlocking system of economic pressure.
So the stress from the Middle East directly inflames the stress of domestic trade policy.
Perfectly stated.
But the source material makes it clear that America's resources, its diplomatic bandwidth and military focus, are not solely occupied by the Persian Gulf and domestic consumer inflation.
No, there's another massive piece to this puzzle.
Right. There is an entirely separate theater of global security pressure operating simultaneously in Asia.
The Pacific Rim is demanding immense strategic attention right now. The diplomatic corps and the military apparatus are being asked to maintain a posture of maximum readiness across entirely different hemispheres.
The text highlights that U.S. lawmakers are currently in Taiwan pushing for stronger defense moves. And, it feels like the U.S. diplomatic and military apparatus is operating like an electrical grid, experiencing a severe brownout.
That's a really apt comparison.
You have too many high-demand sectors drawing peak power simultaneously. You have the Middle East grid drawing power, the domestic economic grid drawing power, and now the Taiwan grid is pulling massive resources. Is this just a case of the system overloading by trying to flex security muscles on too many fronts at once?
Well, it is the defining mechanical challenge of modern American foreign policy. We are observing the reality of dual-front friction.
Dual-front friction.
Yeah. When U.S. lawmakers physically travel to Taiwan to push for stronger defense moves, it requires massive logistical, diplomatic, and economic coordination. A defense move is not just rhetoric.
Right. It's actual hardware and strategy.
Exactly. It involves repositioning naval assets, accelerating weapons procurement pipelines, and integrating defensive tech. They're signaling commitment to a crucial node in the global semiconductor supply chain.
And that semiconductor supply chain is the backbone of almost every single industry we just talked about, from the cargo ships moving the oil to the retail systems processing those tariff-heavy goods.
Precisely. And every time those lawmakers advocate for defense integration in Taiwan, Beijing recalibrates its own risk matrix.
Oh, and how did they usually respond?
Well, that recalibration often takes the form of economic retaliation, perhaps restricting the export of critical minerals used in U.S. manufacturing.
Which feeds directly back into the inflation loop we discussed earlier.
Exactly. Executing this posture in the Pacific while simultaneously signaling possible physical action in the Middle East, it adds severe friction to an already overheated system.
It's all connected.
It is. The source's overarching thesis is glaringly apparent here. America is not dealing with isolated sequential crises. It is facing a web of simultaneous interlocking pressures that drain systemic bandwidth.
The sheer volume of high-stakes, macro-level decisions flying around the Oval Office is staggering. You have Middle Eastern oil choke points, the bullwhip effect of domestic trade wars, military integration in the Pacific Rim.
There's a lot to manage.
And then the source text executes this fascinating pivot. It takes us from these grand, earth-shaking global tensions and suddenly zooms all the way in on a hyper-local domestic detail.
Yeah, the contrast is jarring, honestly. But it is entirely intentional by the author. It illustrates the operational psychology of the administration.
So amidst all of this structural stress, the text notes that President Trump says the new White House ballroom project is moving ahead quickly despite legal fights. So what does this all mean?
That's a great question.
In a briefing dominated by surging global commodity markets, defense strategies in Taiwan, and military signals toward Iran, why highlight a fight over a White House ballroom? What does this specific detail reveal about how the administration handles this web of pressure?
This raises an important question about the nature of executive momentum. The author includes the ballroom because the project serves as a perfect microcosm of the administration's broader governing doctrine.
Okay, walk me through the mechanics of that doctrine. How does a ballroom connect to Karg Island?
Look at the behavioral through line across every topic we have analyzed today. The administration is signaling aggressive action on Karg Island despite the complex friction of impending diplomatic talks.
Right.
They're maintaining and expanding tariffs despite the friction of a massive consumer squeeze and supply chain anxiety.
Yeah, the bullwhip effect.
Exactly. And they are pushing forward with defense moves in Taiwan despite the intense diplomatic and economic friction from Beijing. The methodology relies on forcing action.
Wow. So the resistance is treated as a given, not a deterrent.
No.
It's a pattern of pushing forward, regardless of the blowback, forcing the surrounding environment to adapt to their pace.
The Ballroom project moving ahead quickly despite domestic legal fights mirrors that macro geopolitical stance perfectly, just on a micro level.
That makes so much sense.
It is a demonstration of pure executive momentum. The doctrine dictates pushing forward with a desired objective, whether that's a structural trade policy, a military posture in a foreign hemisphere, or a construction project in the residence, and forcing opponents to constantly play defense.
They just don't stop.
They do not slow down to mitigate the friction, appease the legal hurdles, or calm the market blowback. The Ballroom is the doctrine in miniature. Act swiftly, maintain forward motion, and power through the structural stress.
So the scale of the action changes, but the operational strategy remains identical. Whether the administration is dealing with a global energy valve, a semiconductor supply chain, or, a chandelier in Washington, D.C., the machinery is firmly set to push forward.
Exactly. The momentum itself is utilized as a tool of leverage.
Man, we have covered an immense amount of ground today, navigating a highly complex landscape. Let's synthesize exactly what we've unpacked for you.
Sounds good.
The source material paints a vivid, real-time picture of an America caught in an incredibly dense web of simultaneous structural pressures. You have intense security demands requiring logistical and diplomatic bandwidth in Taiwan.
Huge bandwidth.
You have deep foreign policy friction and market-shaking military signaling happening with Iran. You have a profound economic squeeze landing directly on the American consumer, driven by a combination of that supply chain bullwhip effect from tariffs and surging global baseline costs.
It's a perfect storm.
And operating through all of this, you have an administration utilizing pure executive momentum, symbolized perfectly by that White House ballroom, pushing aggressively forward through legal, political, and market resistance. It really forces us to see how deeply interconnected the local is with the global.
It really does. Because the domestic economy relies on global stability, and global markets react instantaneously to domestic executive signaling.
Everything touches everything else.
Exactly. And, as you watch the news cycle continue to unfold, I want to leave you with one final lingering thought based on our analysis of the Kwarg Island situation today.
Oh, okay. Let's hear it.
We discussed how the mere signal of potential action was enough to send oil and metal prices surging, completely overriding the prospect of diplomacy. So, if global commodity markets are surging this rapidly purely based on algorithmic and psychological anticipation of conflict, how much of the modern global economy is currently priced on fear and speculation rather than the actual physical supply of goods?
Wow. Are we paying for the world as it physically exists today, or are we paying the inflated price for the anxiety of what the world might look like tomorrow?
That's the billion-dollar question.
That completely reframes every piece of economic data flashing across the screen. Think back to that suspension bridge we talked about earlier, carrying maximum structural stress. The wind is howling from the Middle East, the foundation is shaking from supply chain shifts, and the grid is drawing peak power across two hemispheres.
And the bridge is flexing exactly as it was designed to do.
Exactly. The question moving forward is simply how much it can bend before the nature of the structure has to fundamentally change. Thank you so much for joining us on this deep dive today. Keep questioning the headlines, stay curious, and always keep exploring the hidden connections around you.